Welcome back, traders. This is Sandra with Trading Made Simple.
Welcome back, trader. Automation results they're not all winners, guys. But I do want to tell you that if you take a look at our log, this is for a year. We started with 10,000. We're currently at 22,910. And not a bad return for 1 year. However, remember that this is 1 hour a weekend. So when you think about the return on your time, right? 1 hour a weekend, and of course, that's when you're a beginner. If you're a VIP member, you're following along with us, as well as we give you a video of that training session so that if you're a little slower, can't follow along live, then you're able to rewatch the video, pause it when you need to, enter the trade via automation with thinkorswim, and then you just set those trades up Sunday night, you let them go, and they're swing trade for the next Friday's expiration, and then you log those like we do, and then you have your results. So you can basically follow along with a step-by-step process with human interaction to help you. I forgot to do the log video, and so I'm doing this really quick. I'll do it for this week when Friday comes around. So I just need to get in a habit of that. However, you can see that this week, last week, 8.4 to 8, is it 8.6? Yeah, 8.6 I have highlighted. And then right down here on the Excel, if you just highlight those numbers, you can get the amount, right? And now of profit or loss. So let's take a look now at our trades that have triggered, right? That means that the automation worked. And Friday, right, is the end of that period. But as of right now, we do have 6 triggers. We're down 239. I'll give you an update on Friday. And then the other thing that I'll do is actually put the Google Sheet in the description below so that you can actually just follow along when you want to. And then I really want you to take a deep dive when you're thinking about being able to participate in the market with some pretty decent results, and not having to manually sit at your computer all day, be at a doctor's appointment while you're sweating bullets, looking at your phone because you think you might need to get out, etc. So we set up all the rules in the beginning on Sunday night and let these play out. And then another nice deep dive is actually looking back, right? So you can actually see the difference in our log. Hey traders, a quick heads up. If you like what you're seeing here, wait till you see tomorrow's video. It's packed with automation insights and real examples. Hit subscribe now so you don't miss it. And as always, the link to our tools and team is in the description below. Based on the macro conditions. So as an example, when we started this in our live community, we started this in July. Now in July of 2024, we had a different president that doesn't make that many appearances, didn't tweet, just was under the radar. And typically speaking, most presidents are like that. It's not very newsworthy to drive markets, right? So as you see the log, you can actually go down each and every month and see how we did. And it is surprising because as you can see from July 1, let's just go to August 1 really quick. That's down here. What 44. See if I can do that. First month, right? Starting this, 2970. Nice. Let's see, August. Okay, and then we're going to go to 9-1 or thereabouts. I think that's it's hard to see on there. All right, 9-3 guys, 8-1 to 9-3. So let's do that. And by the way, when you get this sheet, you'll be able to do that as well. If you make a copy, you'll be able to do that. Let's see here, 9-3. We made $813 that month. Okay. And we just arbitrarily just started off with a balance of 10,000. I thought that that was somewhat reasonable for most traders. But you can, let's think about that for a moment. If you started with 2,000, like how realistic are your goals, right? You start off with 2,000, then you, doubled your money in a year. And so you may not think, oh, that's not a lot of money. But remember, you're doing this 1 hour a weekend, and when you become proficient, it's 15, 20 minutes. So for the return on your time is really primarily what I'm thinking of. because at some point you're just going to get sick and tired of staring at the screen, missing out on life because you want to participate in the market and you've been trained just to sit there all day. And so I'm telling you that there is an easier way. And so this is how we show you to do that with automation. Now, if we take 9.5 and we go all the way to 10.4, so 9.5 to 10.4, another nice month, right? 1,143. But I want to show you, I think I was overzealous by this $57. So take that off of last thing. And then you got 10.4. Let's go to somewhere around 11.4. Great. That matches up perfectly. So you got 10.4 to 11.4. Let's do that. I think that's right there. Up $536. All right, so now we have the election. Okay, so now you're going to see how the market environment changes, right? With news events, catalysts, these are really important things. And so, and this actually just hits it home when you think about that type of analysis. So let's get that started. 11.4 to around 12.9. Let's do that. So you got 11.4. I think I was overzealous by this $96 as well. Sorry about that, guys. 11.4 to 12. Oops. Well, let me do that. 12.9. That's good. I think that's right there. Okay. So now, first month in for the presidency, we got that's a negative $456. Yep, there's a little negative sign there. So negative 456. Okay. And then we're going to take the next one, 12.9. Oops, I think we did. Oh, I did 11.4. That's bad. Let me redo that one because we got 11.4. And then we're going to take that to 12.9, but not the first one because that's actually the start of a new week. I can tell by all the triggered trades. So if we take it to 11.25 being the end of that week, right, so it's a negative $416. Let's go over here now to 12.9. Very good. And we'll go to, let's see, 1.9 or thereabouts. Yep, 1.7. Okay, we're up 382 on that one. Take the next one, 1 to 2 here. Let's do 1 to 127. That month, positive $1,228. Now remember, as our account is growing, we're buying more contracts, and it's all based on the percentage of your portfolio size, isn't it? If it's not, then you need to think again about your risk management style and how do you grow that account when the tickers and the option prices are all different, right? So let's see, 2.3. Let's go for 2.3 to February to March. That was a negative 414. Sorry about the quick click. That was a negative 414. And then we're going to go to March to April. There. 2,000 plus $2,225. Must have been a really nice volatile week, right? So we need volatility, and the market's just grinding up. We make money that way. We make money if the market is grinding up, if the market is grinding down. We make money if it pops up and it pops down. Where we don't make money in automation in this system is when the market's going sideways. And why is that? Because choppy environments will hit your trigger and then go the opposite way. Then it'll go to your put trade, hit your trigger, and then go to the opposite way. Or it'll just hit your trigger and then go sideways, right? And do absolutely nothing. So that's how the system works. When you have, our indicators identifying support and resistance levels, our watch list provides the support and resistance levels. And so those are the ones that are being programmed in, right? And so those support and resistance levels are important for trend traders. That's how we, gauge the market environment. And we can see based on the volatility what's happening. So there is a time here. Let's go to 4151. We're almost done. This is our overview video, and then it'll just be a weekly, right? Okay, so our overview. We made $1,386 that month. 5 to 6, let's do that. Negative 1,268. By the way, guys, that our biggest loss, right? That was our biggest loss in April. I'm thinking that was trade tariffs. Yeah, news on that. June to July. We're almost at the end of the show here. June. Right. And then we made $2,313. So now that volatility is kicking in, and by the way, we're putting on trade on a ticker for calls as well as puts. So we're doing 2 automations because we don't care where the market's going. We just want to make sure that we have our levels in so that we're prepared for anything. Because oftentimes it's so volatile, you may actually get enough movement there to not only trigger your trade for calls and to hit your target, but also to hit your trade for puts and then also hit your target. Now with that, you can also lose. So we're showing you the winners and the losers. So here we got, here we're at July 1st. Let's go to July 1st to August, okay? Plus $1,525 on that one. And then now we are mid-month, right? We're from 8/4 to 8/11, and we've made $640. So not bad, starting with a reasonable account size. And then how would you look at that if you had a lower? Well, unfortunately, if you have a really small account, it's going to limit the amount of contracts that you buy. If you have a really small account, you may have to increase your risk parameters, right? So in this account, we're risking 3%. And so this actually shows us how many contracts we can buy. We can buy for our tickers, we could buy up to $687, and that's been growing. Originally it was $400. Now we're at $687. This is how you compound and grow as your trading and things are working out, right? But depending on timing and market environment, etc., will identify, right? Because if you just started your automations and you got in on that week that you lost $1,128, you're going to be really mad, right? You're going to be like, this doesn't work. Now, actually, the law of large numbers with your trading strategy and edge, it already, right? You just need enough data points there. So if you can't handle that loss, then you shouldn't be, you shouldn't be trading. Unfortunately, trading really is about having money to invest into the markets. This is one way of doing that. And so I do believe, based on the S&P's performance at this time, this is probably better than, no doubt, not probably, better than the S&P's return, as well as bonds, interest rate at the bank. So that's what we're looking at with this one system, right? We have a couple systems, but with this one system of automation, we're showing you how to automate your trades 1 hour weekend, and you can go live your life, still be able to participate in the markets. You have a smaller account, that's gonna be reflected. You have a larger account. Hey guys, could you imagine if you started off with, 50,000 or 40,000 or 30,000, 20,000 as an example? So we're talking about over 100% return. We started with 10 just to be in between. A lot of our clients, we have a lot on the higher end, we have a lot on the lower end, and then we have a huge chunk in the middle. We wanted to take that huge chunk in the middle so it was relatable, right? If it relates to you. So as you're doing your simulations, make sure that you're doing them based on your portfolio value when you're feeling confident enough to actually switch over to live trading. I hope this was helpful. I wasn't planning. I was only going to do the last week's results, but I really think that this is a great way to analyze data. That's exactly what we just did, right? We went through the log. We saw the change in the environment as volatility kept into the market. and that's really when we started experiencing some losers. And so who knows what will happen in the future? We don't know. But if you can create a system each and every weekend, 1 hour or less, 1 hour when you're a beginner, less when you're experienced, and let those play out. Go live your life and enjoy yourself. We will see you in the next video. Bye-bye.